Everybody, this is John. Welcome to the free video. What another crazy volatile day. So we started off, of course we had the big sell-off Wednesday, and then this morning started off with initial weakness, and then went from about 1870, give or take, up to 1930, 60 handle rally that was pretty much non-stop. I had held on to some puts overnight, and then sent out a text like, "We're getting out. You know, this is bigger. This is bigger than kind of a one-hit wonder kind of a rally." So how do you know that? Well, here we were at the open. Okay, we opened, we sold off, we sold off, we sold off. When you get something like this, where it's 5, 10, 15, 20, 25, 30 minutes of buy programs, and you can't even get below zero, right? That's the first kind of a red flag. That's more than just a little bit of a blip. But then what happened is when the ticks did sell off, the S&Ps really didn't come off very much. They went from like plus 30. Yes, they dropped, but it wasn't a humongous kind of a thing. And you can see during that time, the VIX didn't actually really spike up either. So then from there, when the ticks made new highs and it was a series of higher highs and higher lows, you don't want to hold through that. So it's like bail on that kind of stuff. And then because tomorrow's monthly expiration, not trying to get too cute directionally and focus on potential premium plays. So what do we look at there? Well, I like the idea in this market of having one slightly bullish play and one slightly bearish play and one slightly neutral play that are all based on premium. So for Amazon, they said, all right, and I love doing in the money iron condors, in the money iron flies, technically is what it's called. So what does that look like? Well, it means that for Amazon, I'm looking like, all right, what if we got like a rally or let's say a pin to 600 tomorrow on Amazon? Well, what would be the best way to take advantage of that? Well, so what we did is we sold when it was around this level, sold the 600 iron fly 10 wide, okay, at 690. And obviously then tomorrow, if this pins at 600, then we keep all that. But I'm not looking to keep all that. I'm fine buying this back at 50% of max profit, okay? So to get there, we would need a little bit of strength in Amazon. Okay, and obviously some premium decay. So tomorrow, if we get a quiet day tomorrow, that's the first best choice. In this case, if we open up down 100 Nasdaq points, this trade's a bust. But remember, it's 10 points wide, and I sold it for about $7. So I'm risking 310 to make 690. So I like that one. And then for Priceline, did the opposite. For Priceline, made a bet that we would pin at $1,100, which is within the expected move, and it's a little bit more of a bearish slant. Sold it for $16.40. Again, would be completely fine buying it back for $8.20. And keep in mind, this is $20 wide, so my max risk on this is $3.60. So I love the risk to reward and the fact that we got a little bit of direction with a little bit of premium. And then last but not least, looking at Apple. So Apple sold the $100 straddle, $1.43. If tomorrow we pin it at 100, I get to keep it all. But again, in this market, I would be happy with 50% of max. So on this kind of day, in addition to those premium plays, when you have like kind of hot and heavy markets like this, it's easiest to kind of pick your directional battles. I like to use a tick chart of the S&Ps. Here we got a nice little head and shoulders top with a squeeze, and you got the early warning, okay? And when that happens, it is a pretty solid setup, and boom. And this directional stuff like that is, I think it's easiest with the futures. You obviously could have bought in the money spider puts on this with the idea of just holding it for about 10 minutes or so, all right? All right, so what if you don't know about futures? Okay, so for those of you that don't know much about futures, I'm going to be doing a free webinar on Tuesday, January 19th. It is at 7 o'clock Central. And what I found is just that people don't know enough about futures. So I'm going to be talking about the details, how they work, why you want to know, why you want to actually be able to follow them, even if you don't trade them. Because guess what? Futures actually lead the cash market, okay? And if you don't understand that, it's going to be harder to trade like directionally. Even if you're just trading options or different things like that. So if you, and it's also, they're also good to hedge. Okay, so they're good if you want to learn how to hedge and things like that too. But you don't actually need to trade them, but you want to learn how they work because that's what moves the markets. Again, futures first, and then the cash markets follow. So I'll just talk about that kind of stuff, some details on specific setups that I use for them. I'll also talk about that, hey, if I'm going to do a trade like this on the S&Ps and you don't trade futures, this is how you can mimic it using options on the spiders. Okay, and so I'll go through all that kind of stuff, why they're not scary, things to know about, things never to do, and just the details, so you can actually arm yourself with enough information to say, you know what, I want to trade futures or I don't want to trade futures, but at least I know how they work. Okay, simplerfutures.com/futures 2016. First name, email. Again, free webinar, 7 o'clock Central Time, January 19th on Tuesday. All right, you guys have a good one, and we'll see you at the next update.